Hello and welcome back to the GeoInsight, where we dive deep into global geopolitics, so you're always in the loop. Today, we've got a big one. The United States government is about to impose a 155% tariff on Chinese goods, starting November 1st. And there's a lot more behind this that meets the eye. Stick around, because we're going to unpack why this is happening, what it means for China, the U.S., and the global economy, and how this move fits into a wider geopolitical chess game. Let's get into it. Let's start with the basics. On the 22nd of October 2025, President Donald Trump announced that from November 1, the U.S. will impose a 155% tariff on Chinese goods. He wrapped it in surprising words. "I want to be nice to China, but China has been very rough with us over the years. So, what's exactly changing?" This isn't just a small trade tweak. We're talking about a massive surcharge on imports from China. Trump also mentioned new export controls on critical software, effective the same day. He framed these moves as part of a national security strategy, saying tariffs aren't just about money, they're tools to protect America's position. In simple terms, China is set to face extra duties of 155% on goods entering the U.S., plus tighter controls on software exports. A seismic shift, not just incremental. You might ask, why now? Why such a high number, 155%? Here's the reasoning behind it. Trade imbalances being taken advantage of. Trump argued that U.S. presidents in the past allowed China and other countries to take advantage of the United States. This move, he says, is about reversing decades of imbalance. National security framing. The tariffs are being presented as a matter of national security, not just economics. Trump said his previous trade deals with Europe, Japan, and Korea were built around tariffs as a shield for American interests. China's ties to Russia. The move also ties into the U.S. stance on Russia. China has become the largest importer of Russian crude oil. By hitting Chinese imports hard, the U.S. indirectly pressures Moscow by targeting one of its biggest trade partners. Chinese aggressive trade posture. Trump accused China of taking hostile actions and threatening broad export restrictions. The U.S. views this as part of an escalating pattern of aggression. Put together, this isn't just about unfair trade. It's about strategic power, security, and the global balance of influence. So, how might China react? And what could this do to Beijing's broader strategy? A 155% tariff makes Chinese goods far more expensive in U.S. markets. That could force Chinese exporters to either cut prices, find new markets, or slow production. Software export restrictions target China's technological ambitions, striking at its plans to modernize and compete in areas like AI, robotics, and chip design. Retaliation risk. China might hit back, imposing its own tariffs or restricting exports of critical minerals and components. Domestic politics. China's leadership can't afford to appear weak. Expect strong rhetoric, propaganda framing the U.S. as the aggressor, and maybe even symbolic countermeasures. Strategic shift. China might accelerate its long-term plan of reducing reliance on the U.S. market, focusing on self-sufficiency and partnerships through its Belt and Road network. In short, this move forces China to either adapt or retaliate, both of which come with major consequences. Now, let's flip the coin. What does this mean for the U.S. and the world economy? Consumer costs. Tariffs often mean higher prices. Everyday goods, electronics, home appliances, tools could get more expensive for Americans. Revenue argument. Trump claimed that tariffs bring hundreds of billions, even trillions, into the U.S. Treasury, helping reduce national debt. Whether that holds depends on how trade volumes respond. Supply chain shifts. Companies might move production from China to other nations like Vietnam, India, or Mexico. This friend-shoring trend could reshape global manufacturing. Trade war escalation. If China retaliates, Expect ripple effects in global markets from commodity prices to shipping routes. Third-party nations, countries trading heavily with both the U.S. and China could be caught in the middle. Economic policy shift. The idea of using tariffs as a national security tool could normalize across the world, leading to more protectionist policies everywhere. Bottom line, this could redefine how countries view trade not as cooperation, but as a battlefield. Zooming out, this is part of a much bigger power play. The U.S. China rivalry. The two largest economies are locked in a long-term competition, not just for markets, but for technological dominance and global influence. Energy and Russia connection. China's role as a top buyer of Russian oil gives the U.S. leverage. Targeting Chinese imports sends an indirect message to Moscow too.
Alliance building. The U.S. may use this situation to tighten economic and strategic partnerships with allies like Japan, South Korea, and European nations, promoting the concept of economic security. Decoupling. The world is increasingly splitting into two economic blocs, one centered around the U.S. and one around China. Moves like this tariff push that division faster. Domestic politics. At home, this also serves as a strong political message, portraying toughness on trade and protecting American workers. So, the 155% tariff isn't just a number, it's a symbol of a new global power strategy. What should we keep an eye on in the coming months? 1. China's response. Will it retaliate with tariffs, export bans, or tech restrictions? 2. Corporate moves. Will major companies start moving factories out of China faster? 3. Inflation. Could this fuel another wave of global price increases? 4. Russia-China-U.S. triangle. Will this affect China's energy trade with Russia? 5. Allied reactions. How will the EU, India, and Southeast Asia react? 6. Technology controls. Expect more rules around AI, semiconductors, and quantum tech. This may become the next battlefield. These developments will show if this is an isolated event or the start of a new era. You might be wondering, how does any of this affect you? As a consumer, prices could rise for electronics, clothing, and everyday imports. As a professional, businesses might shift operations, which can affect jobs, supply, and investment patterns. As an investor, tariff wars often shake global markets. Sectors tied to China or U.S. imports could see volatility. As a global citizen, this event redefines how world powers interact. It's not just about trade, it's about who sets the rules of the global system. In short, the ripple effects reach everyone, no matter where you live. No major policy comes without backlash. Some economists argue that tariffs hurt U.S. consumers more than they protect industries. Others point out that such a high rate, 155%, might be more political theater than a fully enforceable rule. Businesses dependent on Chinese parts could face severe disruption. China could retaliate indirectly by cutting supply of critical minerals or tightening export controls on rare materials needed for electronics and EVs. The uncertainty itself could hurt markets. Companies might delay investments or product launches until clarity returns. So while the rhetoric is strong, the real-world outcomes will depend on how both sides play their next moves. Let's recap what we've learned. Starting November 1, the U.S. will impose 155% tariffs on Chinese goods, along with export controls on key software. The move is justified under the banners of national security, trade fairness, and strategic leverage. For China, this is a huge challenge, economically, politically, and technologically. For the U.S. and the world, it's another chapter in a growing economic confrontation that could reshape global trade patterns. The broader picture, this may mark the official acceleration of economic decoupling between the two superpowers. The question now is, will this stop at tariffs, or are we entering a new phase of global competition that touches every corner of our lives? Thanks for watching the GeoInsight, your trusted source for in-depth global analysis. If you found this breakdown useful, hit the like button, subscribe, and turn on the notification bell. It really helps us bring more world-shaping stories straight to you. In our next video, we'll track how China responds, from official statements to global market reactions, and whether this could trigger a full-scale economic showdown. Tell us in the comments below. Will China retaliate or take a wait-and-see approach? Do you think the global economy can handle another trade war? Until next time, stay aware, stay informed, and stay curious. This is the GeoInsight, signing off.